Thursday edition of the Daily Market Commentary. Hope everybody had an amazing trading day yesterday. I am your host, Chuck Fulkerson, ready to kick it off and to get rolling. So let's dive right in. So first of all, taking a look at the S&P. And one of the things I had talked about over the course of the past couple of days was the need to remain patient and not to take trades just for the willy-nilly sake of doing so. And on the video yesterday, I'd said, I think when we were recording, it was right at about this candlestick right here. And I really felt like, if you wanted to be short right now, it's a good time to get short. And that's, it wound up working out for a pretty nice move down. Now, we did hit the breakout point, and from our breakout point, moved down an additional 10 points or so. So had a nice breakdown out of that level. And so we are now to a point where we've come back to that area. If you're not short yet, or you are not sure about getting short, I think that there's an opportunity for another breakdown coming out of where we are currently. If we break down a bit lower from here, we've rallied back up, but we've not rallied back up with any sort of strength. So to me, this is short covering. I think there's another little leg down, a little thrust down that could occur, and I think it could get us down at least into this region, possibly all the way down to here. So I'm not ready yet to call off the dogs, if you will, for the market to really just start shooting back up. Although we are just chopping along and taking our time at this juncture. Same thing in the Nasdaq, although the Nasdaq hit our area and it didn't break through with the same fortitude and with the same strength. Now, if you are in this one, you got in for a little bit of a move, and then it started to kind of go against you right away. So, the Nasdaq being the stronger of the two markets was certainly not the one to short. So we talked about yesterday is that if you're going to short, the weaker of the two markets has been the S&P over the last couple of days. So for now, what I'm going to do is remove this breakout line and take a look at where our next opportunities could lie. You may get something up here on the reversal. I don't really see anything in here that I'm in love with today for me to wrap my lines around. I'm going to leave all of those areas kind of clear. Looking at crude oil. Now, crude oil, I completely missed that one. I genuinely felt like we would get a nice move down into here. We'd get a bit of a reversal and then pop back up. Absolutely not. It was a fairly tight level, which is good, and I'm glad it was a fairly tight level because it just blew right through, and now it's still hovering kind of around that range. Same thing in gold. Gold, I had a fairly tight level in place. Really felt like that 1300 would be able to hold. Obviously, it was not, and we blew right through. So this is one of those cases where the gold and the oil may have negated some of the gains that you had from the S&P, but this is why we have smaller losses in play, and we have stop losses because it allows our winners to continue to run. So gold, I put a little tweet up yesterday. Gold got punched in the face yesterday, took it on the chin as it continued its move down. There's really more room for gold to fall at this point. We have some reversal potential up here, but we're nowhere near that level at this moment. So if you want to get back in and you want to take advantage of this short, and if you think it's going to keep going down, now would be a time to maybe look at trading the next breakout. And the next breakout would be below 1288, so somewhere below that range if you wanted to trade the next breakout. Now, why would the next breakout be okay? Well, because we bounced off of it once, and now we're chopping above it. The chopping above it helps to erode some of the orders that exist there at the moment. Next, bond market. Now, the bond market, a little bit of a different reaction. So we did finally get our breakdown in bonds as it broke below our level. Strong move down into this 4-hour kind of range where there's not a whole lot to stop it from going down a bit further. So in the bond market, we did get the sell-off we've been waiting for. So hopefully you're able to be patient enough and wait for that one. I still see this one has a chance to keep going and keep moving. In the Aussie, we had put in a dashed line. Gotta love those dashed lines because it means you don't get into the trade when price comes straight through it like this. This one did not give us that confirmation entry, so we do not have that set up in play. However, I can't use that level again. What we have now is we put in a little bit of a double bottom right here. It's not a great double bottom, and I've got, so if you were playing kind of that double bottom pattern, you'd say, okay, well, then when we get above here, we would go long. Well, my problem with that is that just above us, we have this. Now, my problem with getting short on this is that I don't like the chopping above it. My problem with getting long on this is this area here. So you know what that means to me? It's like, it's like adding +2 plus -2 equals 0. And so I'm not taking either one of those. Both of them have too many reasons to not take them. Looking at the euro is continuing its move down. We had talked about the breakout here earlier this week. If you're still short this euro, you should be doing the happy dance, yippee-ki-yay. If you're not short the euro, then don't get short right now. There's no reason to get in at the moment. We may get another retest back up to this region. I still have this area outlined because I think this is a slightly better area. Canadian dollar. Canadian dollar, we have really been going sideways. Not a whole lot here to bring on or to add. We had a very strong drop yesterday in the early morning, rallied back up, and have really not done much since then. So being in between regions, I'm going to once again leave this one be as well. This is just the time that I want to practice patience, and I'm not going to force a trade. If it doesn't come into my area, I'm not going to take it. We are getting close in our Japanese yen, as our Japanese yen level is still above us, so that level is still very much in play. The Great British Pound level, not quite yet in play, although I will say that based on this movement that we've had through here, I would actually be okay if somebody wanted to take a long above this area here and use this as a breakout long potential. Now, why would I use that? Well, because it was support, 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 old support becoming new resistance. I'd actually be okay with that at this point because we've bounced off of it a couple of times. I think that there's room for it to run from this level. So with that being said, I'm going to turn this thing off for the day. Just make sure that you keep an eye. I think that there's still more room for us to go down than there is to go up in the S&P as well as the Nasdaq. If you have any questions, please feel free to shoot me an email, chuck@iiefinancial.com. Until tomorrow, I will see you soon. Thanks so much.